Good morning. Here is today's Korean economic news briefing. The global economic landscape remains highly volatile, driven primarily by the ongoing Middle East conflict. This morning, we delve into how these geopolitical tensions are impacting our domestic economy, from soaring energy prices and inflation to government responses, financial market fluctuations, and shifts in industrial strategies. First, let's address the critical issue of rising energy costs. Deputy Prime Minister and Minister of Economy and Finance, Gu Yoon-chol, has indicated that adjustments to the oil price ceiling will inevitably lead to price increases, emphasizing the necessity of fuel tax cuts to minimize the burden on citizens. This comes as crude oil and diesel prices have seen particularly sharp increases due to the Middle East variable. President Lee Jae-myung echoed these concerns in a cabinet meeting, stressing the activation of an emergency response system for the Middle East conflict and a stern crackdown on any price gouging in fuel markets. The president also reiterated the urgent need for parliamentary approval of a war supplementary budget to provide swift and comprehensive support for ordinary citizens and small business owners. The government plans to submit this supplementary budget to the National Assembly by the end of this month. In response to the escalating crisis, the administration is also taking steps to stabilize the foreign exchange market, aiming for the passage of the Foreign Exchange Market Stabilization III laws within this month, alongside a review of expanding policy finance by 20 trillion won. Furthermore, to mitigate energy demand, the government is strengthening the mandatory 5-day rotation system for public sector vehicles, targeting 1.5 million vehicles used by public employees, with disciplinary action for repeated violations. This measure alone is expected to save approximately 3,000 barrels of oil per day. The private sector is encouraged to participate voluntarily, and companies are being urged to adjust commuting hours. A national energy saving campaign is also being rolled out, with calls for citizens to charge smartphones during off-peak hours and practice 12 other energy-saving behaviors. The impact of these rising energy costs is already visible in our macroeconomic indicators. The Producer Price Index, a key gauge of inflationary pressure, recorded its sixth consecutive monthly increase in February, rising 0.6% from the previous month and 2.4% year-on-year. This acceleration, up from 1.9% in January, marks the highest annual increase since July 2024, with petroleum products and financial services being the primary drivers. This persistent rise in producer prices fuels concerns about a broader increase in consumer prices in the coming months. The government and the Bank of Korea had initially projected a 2% economic growth rate for this year, but warnings are now emerging that prolonged Middle East tensions could push this down to the 1% range due to surging energy prices and trade contraction. This precarious economic environment also puts the spotlight on monetary policy. Attention is drawn to Shin Yun-song, who has been nominated as the next governor of the Bank of Korea. Formerly a director at the Bank for International Settlements, BIS, his monetary policy stance will be crucial in navigating the current inflation concerns exacerbated by the Middle East situation. Globally, U.S. Federal Reserve officials are presenting mixed signals on interest rate policy, with some expressing caution about rate hikes solely due to oil prices, while others suggest increases might be necessary if inflation rises. The uncertainty surrounding U.S. monetary policy adds another layer of complexity to our own economic outlook. Turning to our financial markets, recent days have seen extreme volatility. Yesterday, the Kospi experienced a sharp decline, plummeting over 6% to the 5,400-point level. This triple whammy of surging oil prices, a rapidly appreciating dollar against the won, and renewed fears of U.S. interest rate hikes led to a massive sell-off by foreign investors, even triggering a sidecar on the Kospi 200 Futures Index. Today, however, we observed a partial rebound. The Kospi and KOSDAQ indices both closed with gains of around 2%, buoyed by cautious optimism over potential U.S.-Iran negotiation prospects. Yet, the rally saw a reduction in gains from early morning highs, reflecting lingering geopolitical uncertainties. The $1 exchange rate, which had pierced the 1,510 won mark, retreated to 1,495 won at one point before climbing back above 1,500 won, highlighting the persistent currency volatility. In this environment, investors are increasingly flocking to dollar parking exchange-traded funds, ETFs, with one such fund seeing its net assets surge by nearly 100 billion won in the past month, signaling a preference for safe haven assets. In the industrial sector, companies are adapting to these new realities. POSCO Group Chairman Jang In-hwa outlined a two-core strategy focusing on steel and battery materials, aiming for tangible results in 2026 amid global protectionism. This includes securing profitability through joint ventures in North America and India for steel, and commencing commercial production of lithium in Argentina. Meanwhile, to address the LNG supply emergency, the government is expanding the utilization of nuclear and coal power, alongside a target of supplying 7 gigawatts of renewable energy this year. In a promising development for energy innovation, the Guangzhou Institute of Science and Technology, GIST, has developed virtual battery technology, allowing multiple electric vehicles to be aggregated and utilized like a power plant, accelerating the commercialization of vehicle-to-grid (V2G) systems. The real estate market also continues to see active government intervention. The Korea Land and Housing Corporation (LH) is recruiting applicants for 9,120 lease homes for newlyweds, new parents, and multi-child families from today until December 31st. Minister of Land, Infrastructure and Transport Kim Yoon-dok emphasized the government's commitment to expanding housing supply and ensuring market stability, particularly stressing the role of the Korea Real Estate Board and the Housing and Urban Guarantee Corporation (HUG) in accelerating urban regeneration projects and preventing housing scams. Interestingly, a recent report indicates that Korea's effective property tax rate stands at 0.15%, roughly half the OECD average, even though the burden relative to GDP is comparable. This suggests room for policy adjustments in the future. Finally, we turn our attention to the rapidly advancing field of artificial intelligence. The media is highlighting AI as a catalyst for economic insight and investment, with the government actively supporting AI companies through export programs and global market expansion initiatives. Tech giants like Kakao are integrating AI agents into commerce, allowing users to shop via AI conversations on platforms like Olive Young and Musinsa through ChatGPT for Kakao. Regions like Guangzhou are striving to become AI capitals by fostering integrated AI industrial, research, and residential complexes. However, this AI revolution also brings warnings. Larry Fink, CEO of BlackRock, cautioned that AI could exacerbate wealth inequality by disproportionately benefiting those who already possess financial assets, stressing the need for broader sharing of AI's advantages. For investors, the current economic climate calls for caution and strategic diversification. Global uncertainties stemming from the Middle East conflict and U.S. monetary policy mean continued volatility in the stock and currency markets. Defensive assets, such as dollar-linked ETFs, might offer some stability. Opportunities could emerge in sectors focused on energy efficiency, new energy technologies, and AI innovation, particularly as government support and industry focus on these areas intensify. Closely monitor government policy responses, including the supplementary budget and potential fuel tax adjustments. For the general public, preparing for continued elevated energy costs is prudent, though fuel tax cuts aim to alleviate some of the immediate burden. Participating in energy-saving campaigns, like the public sector vehicle rotation and daytime smartphone charging, will contribute to national efforts. In the housing market, government initiatives to expand supply and stabilize prices aim to provide more options and security. That concludes today's Korean Economic News Briefing. Thank you for joining us.